Hello, I'm Perrin Beatty, President and CEO of the Canadian Chamber of Commerce, and welcome to the Business of Business. Throughout the COVID-19 pandemic, we'll be having a series of conversations with senior business people and other experts about the impact of the pandemic on Canadian business. We're particularly fortunate today to have Greg Grice, who is the Executive Vice President for Business Financial Services at RBC, and he's had that job since 2017. In addition to that, Greg has been very active as a volunteer in post-secondary education, in supporting healthcare and business. And he's a distinguished member of the board of directors of the Canadian Chamber of Commerce. We're delighted to have him with us today. And Greg, thank you for coming and joining us today.
Well, it's sure great to be on the call with you this morning as well, Perrin.
But you are really well positioned where you are, and you've been very helpful to me through the pandemic and giving me a perspective in terms of how business is being affected and what's happening in the economy. What are you seeing from your vantage point in terms of how businesses are being hit and how they're responding to it?
Well, I would say this, in terms of my 35-year career in banking, this is probably one of the most significant market disruptions that I've ever seen. In fact, when you think of the widespread impact on every street corner, in every city, in every province, and in fact, globally, we've never really seen anything like this in the past. So I think in terms of the size and scale, I just don't think there's a comparator out there. Most clients that I'm speaking to today would really have two fundamental questions. The first one would be, what impact will COVID have on my business over the short, medium, and long term? And the second question, equally important, is will I have sufficient liquidity to carry my business through to a new normal? And we've done quite a bit of surveying at RBC in recent weeks, and I just thought I'd give you a quick few highlights around how companies are feeling and the impact that we're seeing. So 4 out of 5 companies have experienced a revenue decline from the COVID outbreak. And when we look at our business, we really think of it in terms of small business, those clients with less than 3 million in sales, and then our commercial clients, which would be clients generally with 3 million in sales up to 100 million in sales. And for our small business clients, who arguably have been the hardest hit, they've experienced on average a 65% revenue decline. And for commercial clients who've indicated they've had a decline, their average decline has been about 50%. And when 4 out of 5 commercial clients and 9 out of 10 small business clients, when they look forward, expect to see continued declines in the months ahead. So really kind of a bit of a negative outlook that we're seeing in terms of what clients are telling us in surveys. So how have they responded? Most small businesses have laid off about 75% of their staff for those that have had to lay off. And the business owners connected to those businesses have often indicated as well that they're taking a fairly significant reduction in salaries. On the commercial market side, again, those with sales over 3 million, 50% that we've surveyed said that they've had to lay off staff, and where layoffs were necessary, they laid off about 2/3 of their workforce on average. But as you know, not every sector has been impacted equally. In fact, some have actually done quite well through COVID. Grocery stores, pharmacies, some of the fast food takeout delivery businesses are really actually seeing an increase in their overall outcome. So it's a bit of a mixed bag, but what we are seeing is that those entrepreneurs out there are finding ways to pivot their business model so that they can keep their business going through COVID. So I think we'll see some that'll will do just fine.
But what we are seeing here is the same phenomenon as we're seeing in other countries, that it's small business that really seems to be at the pointy end of the stick and is really feeling the impact. I assume because they don't have the cash reserves that larger businesses have, first of all, and often that they don't have the planning capabilities and other flexibilities that a larger business might have.
That's right, exactly. Yeah, we're seeing that for sure. Yeah.
Well, so at this stage in the pandemic, we're focused on 2 things. The first is obviously how do we ensure that the businesses can survive in the short term, and the other is how do we prepare for the decontrol of society and to try to restart business activity. And I want to touch on both of that, both those areas in our conversation. But let's start with the present and with the support that's being provided for businesses, and particularly for small business. Obviously, businesses will be looking both to their banks and the government. What is the intersection between government and the banking sector in terms of providing these supports? How are you working with government? Is it working well? Are there gaps in the system that people are falling through? Or is is everything pretty well covered?
That's a great question. And we in mid-March, it became apparent to us that the lockdown was going to be extended and that for an indefinite period of time and that businesses were going to be impacted. So within days of becoming aware of that, as I said, in mid-March, RBC launched to what we refer to as our client treatment program, which enabled businesses to defer loan payments and credit card payments for up to 6 months, as well as extend operating lines of credit up to 10% to help ease cash flow constraints. And I think that will be helpful in terms of, bridging through this period and preserving cash flow wherever possible. But at the same time, we also immediately and concurrently began to collaborate with government and other financial institutions to stand up the government relief programs, which you would be aware of. One of the big ones would be the Canada Emergency Business Account, the Canada Emergency Wage Subsidy, and then more recently the EDC and BDC programs. When we kicked these off with government, we had to really prioritize speed to market over perfection. And I can tell you it was an incredibly intense period of time, but I think we've gotten some really good traction. CEBA was first to market, and we were ready to go within roughly 10 days. And just to give you a sense of the scale, at RBC, we would typically process between 120,000 loans in a year. And then if you put that in the context of CEBA, we've actually processed 135,000 CEBA loans from April 9th to May 13th. So you can just get a sense of the significance of and the scale of this effort. And that's put over $5.4 billion of liquidity into the hands of our clients and businesses overall, all over Canada. So I think that is, a fairly significant injection of liquidity that I think is very, is very much appreciated by small business. But it's quite interesting that, when we looked at CEBA overall, approximately 12% of RBC's clients have actually taken advantage of the program, which is a relatively small amount when you consider, the magnitude of the disruption that we're seeing. And when we look more specifically at who's actually taking up the offer, our mid-market commercial businesses, those businesses that generate sales between $1 and $10 million, are actually taking a disproportionate uptake of the program. Small businesses, and particularly micro businesses with less than $100,000 in revenue, are far less likely to take advantage of the program for two reasons. One, they have an inability to meet the eligibility requirement. And secondly, most importantly, and we're seeing this theme come up more and more, is that they are reluctant to take on additional debt, especially given the uncertainty of the markets going forward. And they're just unsure as to how they're going to pay it back.
And that's certainly the message that we're getting from across the country. Small businesses are feeling very squeezed. They're uncertain about the future, and they're worried about accumulating any more debt. So it means that the wage subsidy program and a properly functioning rental subsidy program would be the two areas that they would see as being the greatest benefit.
That's right. When you put those together, when you think of those things in aggregate, I think that's a pretty substantial support to businesses, and I think it's going to make a difference. But to your point, to get them all well functioning and to get that relief out there as quickly as possible, I think is going to be key.
Yeah, and certainly that was the other message, that whatever the design of the program, the issue was they did not have large reserves, and they would be running out of cash quickly. The important thing was to get the money out into the hands of the businesses as rapidly as possible. Otherwise, it would be simply too late, and they would be lost as a result.
That's right.
Looking sector by sector, this obviously cuts unevenly as well. What sectors seem to be hardest hit from your perspective? Which ones are managing well? You mentioned pharmacies and grocery stores doing fairly well.
Yes.
Where's been the most negative impact?
Well, if you take a look at just the take-up of CEBA as an indicator, we're seeing the largest uptake, believe it or not, in healthcare. Doctors and dentists' office would be by far the largest, where you can imagine they've got a fairly high fixed cost structure, and they were locked up very early in the process with revenues that went down to zero. I mean, the odd dentist can open up for emergency type situations, but you can imagine their revenue flows have gone down substantially.
It makes sense. I hadn't thought of that, and we don't read about that in the papers, but it makes sense.
Yes. So healthcare for sure, consumer services, restaurants, any business that requires street traffic to keep their revenue flows going and have been shut out because of the social distancing, physical distancing requirements, are seeing an uptick and have an urgent need because they've never really contemplated a scenario where revenue goes to zero and their expenses continue.
When we look at the travel, that is airline in particular, at tourism, festivals, restaurants, hotels, hospitality sector more broadly, they were really, the irony here is they were first in. Usually it's first in, first out, but they may be last out as well because of this element of social distancing. Is this going to require tailored programs specifically to those sectors to assist them over a longer period of time?
I think so. I think the ultimate objective is we want to preserve businesses, we want to preserve employment. And even what we've seen in some of the provinces that have started to reopen gradually, we're seeing that in the restaurant sector, some of them are going to be forced to even operate at 50% capacity. There might be some expansion of their patio capacity, those sorts of things. But I think it's realistic to expect that they will take the longest to get back to a pre-COVID type of revenue activity or business activity, if at all, if they will actually get to that point. So I think it's conceivable that if anybody's going to need more support, it's those businesses that will take a longer ramp up time.
Tell me about the bank itself and its operations. You're in every community across the country pretty well, and it's pretty direct interface with the public there. You've had your own concerns, obviously, about how do you protect your own employees, but how do you remain, you're an essential service. How do you remain available? How does this work for RBC?
Well, it's very interesting in a couple of fronts. I'll break it into two groups. You would say our national office groups, we have about, believe it or not, about 95% of our national office teams globally are working from home, which is an incredible feat in terms of
90%.
Yeah, and working in a distributed fashion. And when you think of what we just talked about in terms of putting up a CEBA program where we do 135,000 loans in a period of weeks when we normally take a year to do, being able to actually engineer that with having everybody work from home is quite a feat. So I would say that that's been quite a success, and we're quite excited about that. When you get into branch banking and you get into our advice centers and those sorts of things, that's where social distancing, health and safety concerns of both our employees and our customers have become to the forefront. So we've had to, in many cases, we've had to close down some branches. I think we're about 38% of our branches at the height of the crisis actually had to be closed, and then we'd have to consolidate staff into other branches to be able to keep those essential services going. So as we think about the re-entry and the re-emergence, we will be taking as a company a very thoughtful approach around how do we step into this in phases, and how do we make sure whatever we do aligns to what the health authorities are saying are the best practices, so that we can ensure both our employees and our customers that we got their well-being in mind, and that as we restart our operations, that we'll do whatever we can to make sure we don't have a resurgence, because we fundamentally believe as a country and an economy we can't afford to have a do-over on this.
And it's complex for you, Phil, as a national institution, in that it's not one size fits all. You'll be opening regionally at a different pace, and also it will be easier for you in some branches to open just because of the physical layout of the branch itself than in others. That's quite a logistical challenge for an organization the size of RBC. That's
right, and to your point, every province has a different philosophy and a different schedule and cadence on how they're going to open. So we're having to engage our local teams, making sure that we align to our enterprise standards, but at the same time, make sure that we keep pace with what's going on locally. It's quite a challenge.
Well, let's look at this issue of decontrol and of restarting Canadian business. How do you feel it's been going so far? We're in the very early stages at this point. Is your sense that it's gone well? Has it been sufficiently coordinated across provinces and regions, or are there improvements that could be made?
Well, I think the challenges we've just put out is that it's not uniform across the country. So to the extent that you have to deal with that complexity, if there was ever a way to have it more synchronized, that would be helpful. But I would suggest that's probably unrealistic. But I would say in the early days, what we're seeing is that there seems to be a strong element of care and thoughtfulness around the well-being of employees and customers, regardless of which business you're looking at in terms of being reopened. So I think people are taking a very thoughtful approach from what I can see in Canada. And I think that this idea of doing it in stages allows us to take a measured approach, try to get a sense of what happens, determine to what extent there's a resurgence, so that you can pause, you can respond, and then adjust the approach going forward. I think that's the right way to go. I think people are anxious to get back, as everybody can appreciate. But I think that going there too quickly without understanding the consequences could put us back into resurgence, could put us back to where we started. And as I said, I don't think we can afford that as a country or an economy.
And I think it brings us to the issue of confidence. We talk often at chamber board meetings about business confidence or investor confidence. In this instance, it's employee confidence and customer confidence that we have to look at. That with so much of the activity, particularly for SMEs, being discretionary activity on the part of customers, unless they feel that they are not putting their health or the health of their families in jeopardy, people will hold back. And what we've seen in Germany and China and many other jurisdictions, that even as decontrol takes place, people have been reluctant to come back into the retail sector or restaurants and other areas. So working hand in glove with the public health authorities is going to be critical in satisfying people that it's safe to go out and it's safe to resume some elements of normalcy.
That's right. And I think to the implication for business that they'll have to take that seriously, and they'll have to have a visible demonstration that they are taking their customers' safety and their employee safeties at heart if they're going to expect people to engage with them in their business. Back to our recent employee research, we would say 3 out of 4 Canadians actually do not believe that the virus is actually contained or that there's a path to containment. So I think that there's an element of worry. And 7 out of 10 would say that they're not going to be fully satisfied until there's a vaccine or some sort of other treatment that will give them the confidence that they can engage the way they did pre-COVID. So I think there's this element of worry out there. And I think for all business, including ours, we're going to have to respect that. And we're going to have to make sure that we provide some sort of visible evidence that we're looking after them.
So there's a significant transition period, even before we get to the new normal, whatever that new normal is.
That's right.
To what extent are you seeing the likelihood of permanent changes in terms of behavior, in terms of the structure of the economy? Well, RBC, you mentioned the fact you've had 90% of your people in some of your offices working from home. Do you see permanent organizational changes? What we certainly have seen is the greater digitalization of society. Do you see that moving back from there, or do you see that continuing? What do you see as the permanent impacts of this in terms of how businesses operate?
I think there's going to be a permanent shift of some percentage to what we did through COVID. So, for example, we've proven as an organization that we can actually work effectively with a distributed workforce. And when you think of where a lot of our national office teams are located in major urban centers, and you think about the idea of a 1.5-hour commute each way, that people can actually get this elements of balance in their life if they can work from home, and if it works from a business perspective. I think there's going to be a demand for more staff to work from home, and I think that given that we've had this experience, that we have confidence that we can continue to operate the business effectively with a work from home type of approach, that I think we'll be receptive to allowing more of that to happen. On the flip side, when we start to think about how we bring people back to an office environment, I think physical distancing is going to be with us for some time. So even if we wanted to, I think the idea of bringing 100% of the people back to the office is probably something that's not going to happen. So I think we're going to have to have the phased approach anyway. And I do believe there'll be some element of physical distancing for a long period of time, probably to the point where we have a vaccine where people can feel safe again. Back to those stats I gave you, that people in the back of their mind just have this concern about their personal safety. So I think that there's going to be a period of time where we're going to live with this kind of new normal. And to your point, we're seeing a significant shift to digital engagement in in many businesses, including our own, that I think will have a permanent shift on how people do their banking, for example. For those that were maybe lagged the industry in terms of moving to more of a digital engagement with their bank or e-commerce in their own business, I think that will be more of a permanent shift, which I think will provide opportunities for businesses down the road.
And I suspect what's interesting to me is I'm trying to think when the last time was I touched money physically. Stores are saying to me, we don't want it. We want you to use your credit card. Didn't used to be that way.
Right.
I suppose the move to a cashless society is another element of this as well.
That's right. That's right. And I think that there's going to be a natural shift to that. And I think as people get more comfortable with digital technologies, I think there will be a continued movement in that direction. But I think we'll always be guided by what our clients want us to do, and we'll always follow the client in that regard. So I think there's always going to be an element of both. But I think that shift is going to happen for sure.
So for businesses that are watching us today that are looking at restarting, do you have any pointers, any suggestions to them as to what they should be doing now in advance of trying to reopen?
Yeah, so I think first and foremost, I think they're going to need to look at their operating model, how they engage with customers, and to our earlier point, make sure that they have a plan to be able to visibly demonstrate how they're looking after their employees and their customers from a health and safety point of view. I think that would be job number one. I think that for all of us, there's an opportunity to capture lessons learned through COVID. How did we individually and collectively respond to this crisis? And what opportunities come out of that either new way of working, or in many cases, businesses had to pivot their business model to drive different revenue streams as they went through this crisis. What do we learn from that? How can we capitalize on those opportunities so that we can ultimately create a better business for us going forward? So I think every business should consider those lessons learned. I think businesses that as they reemerge, they have to think about their supply chains and whether or not those supply chains are still intact, whether or not they're healthy, whether or not the suppliers that they have financial stability, and then recognize that as they go forward, the sales to cash cycle is probably going to be protracted as people look to collect the receivables that they may have had outstanding, to turn them into inventory, to start up their business and then have to fund that cash flow requirement until the cash cycle picks up again. I think all of those are going to have to be things that businesses start to think and plan through and scenario plan, so that they're able to get through this reemergence phase in a way that satisfies them and keeps the business going. So I think that'll be a bit of a challenge. But I think like any good crisis, we should never waste a good crisis. So how can businesses think about their business model differently? Is there more to do on the e-commerce side, on the move to digital? Can they create new revenue streams, new product streams that they didn't even imagine were possible pre-COVID, that they've discovered a little bit through COVID, and how can they actually then use that as a way to advance their business going down the road? I think there's some pretty exciting things about things to consider around the business model in general.
That brings me to the final question I wanted to ask, and this is a very rough time for business right now, and this will continue for some time. But you're putting a picture in the window of looking to move to a model that is better than the one that we had before, as opposed to going back to where we were at the 1st of January. As you look forward beyond the short and medium term, are you basically optimistic about where we can be in Canada, or do you believe that the future is as bleak as we've seen events being over the course of the last while?
Yeah, I guess personally I'm a bit of an optimist. I think that there is a next new normal that has an exciting future. I think unfortunately there will be some businesses that don't make it through this crisis because they just didn't have the staying power. They may have been challenged going into the crisis, and then having to weather a storm like this. Unfortunately, I think we will see some businesses that won't make it to the other side. But I think en masse, I think the government response has been fairly quick. I think there's liquidity out in the market that will help those businesses that have staying power to weather the storm. I think that we've got a very talented a group of entrepreneurs in Canada that are constantly thinking about how do they tweak their business model, how do they generate new revenue streams. I think this will spur on a new period of innovation, and that we will see different businesses come out of this that perhaps weren't there in the earlier. And I think that I personally think that we will see a resurgence, not a V-shaped recovery, but maybe a longer U-shaped recovery, and we'll see some interesting things come out the other side.
Greg, thank you. Thank you for the support that you and your colleagues are giving to Canadian business throughout the crisis. And thank you so much for being with us today.